Two Bowls in a China Shop is brought to you by these great companies that are giving us money to let you listen to their stuff.
Bullshit, Kyle. We make this show. You and me. Two Bulls in a China Shop is brought to you by us.
Someone's got to pay the bills, Dan, because it's not our trading.
All right, roll them.
You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat smiley face. Well, hello everybody and welcome back to the China Shop. We are cautiously opening up the doors today as Erik from ES Invest joins me for today's news update. Before we jump into talking about all that junk, I'd like to take a quick moment to say thanks to our friends and sponsors over at Manscaped, Trade Pro Academy, and Orderflow Labs. Manscaped is the best in men's below-the-waist grooming with precision-engineered tools for your family jewels, but with Manscaped now getting involved in the world of beard care, it's the perfect time to take advantage of our exclusive offer of 20% off and free worldwide shipping using promo code 2bulls at manscaped.com. As always, that is the number 2. When it comes to institutional quality trading education, look no further than tradeproacademy.com. In our free Discord server, you'll find instructions to take advantage of our discount with them as well. We just booked Vico for a new update to kind of talk about the new stuff they got going on over there. I'm excited to see some of the new courses they're putting together for futures trading. And speaking of futures trading, if you're a degenerate like me who enjoys trading them, you'll definitely want to look and check out the custom tools and studies over at orderflowlabs.com. And of course, make sure you follow Erik at ES Invests on Twitter, YouTube, and OnlyFans to make sure you're getting the best market-related content out there. And lastly, be sure to reach out with your suggestions, corrections, or questions for future guests. You can do that via email at twobulls@financialineptitude.com, or you can just join that aforementioned free Discord server, where a bunch of amazing people gather to share our struggles and lessons learned with other like-minded market aficionados. Be sure to put all those links in the episode description, along with all the news stories that we talk about. And speaking of news, why don't we just jump into it? Erik, what's new with you?
Nothing.
All right. High energy today. That's the kind of day it's going to be, huh? Flubbing minds.
I love the one word responses. They're
I know.
Actually, I'm super stoked because I had Wi-Fi today. I didn't have Wi-Fi yesterday. Out all day.
Yeah, did you? I was afraid you wrapped your McLaren around like the neighborhood node or something. I was checking the news stories in California.
Certainly disenfranchises me that you presume that I am that awful of a driver, but I actually did not befall that fate. I don't know. It's just like this big outage that happened most of the day, and then it really did remind me though. I like to call them stoic challenges, but it was like a pretty damn good reminder of like how thankful I am for interwebs.
Yes.
And
No
also
kidding.
I realized that I can just hotspot and pretty much do everything. So yeah.
Were you still able to trade?
Yeah, dude.
But well, I guess you don't do anything that active. You just need to pop on and check probably once every day or so.
Yeah, more or less. Like I didn't have any earnings plays on or anything like that. So all in all, it was pretty laissez-faire. Mm-hmm. Nothing too difficult to manage. But I think that it is one of the really beautiful things that I've developed over time, specifically with the way that I approach the markets, is that it doesn't screw me over if I can't access the markets. And I learned that especially from being on active duty and whatnot, because there's periods where you really have to think through those kind of trades that you're going to have on during those periods. So yeah, overall.
I wasn't really trading when I was underwater, but I don't think there was much. I would have to be swinging like year swings.
Yeah, well, and I mean also, like you're highlighting, right? Like being under is definitely a lot different than green side. We don't do that too much. Mm-hmm. So I typically could still have periods of access, even if we were on ship or something. You hit a port every once in a while, right, and you can get access. So I typically would just structure trades that I knew in advance wouldn't need my intervention, even if we didn't make the port call, because anybody that has been on a ship also knows that,
Yep.
You might think you're going somewhere, but then you're not.
We used to put posters up on the missile tubes as we got closer to pull it into port, right? The worst was when you have to pull them down because you got extended for another 7 days or 12 days or 2 weeks because your sister boat got broke.
And then, yeah, exactly. Yeah. You kind of learn to be pretty damn flexible.
You just go to bed and wake up and do your job, and hopefully you go home at some point.
Bingo. That's exactly it. Because, I think that is 100% spot on.
So it's like life.
You definitely learn way more effectively how to just go with the flow.
Yeah, I would agree with that 100%.
Yeah. So, yesterday was a good work on that. But then today, we're continuing to see earnings coming out, and earnings have been fascinating.
Mm-hmm.
All sorts of interesting performances. And, I think there's been a lot of really tradable opportunities off of that.
Well, speaking of earnings, I mean, I was definitely looking at Tesla's. That was the one that everyone seems to think was driving the market higher today. Tesla is such a weird animal. I still can't figure it out. Like, explain to me how a company with, 24 billion in revenue is worth 10 times the market capitalization that GM is when it has double the revenue.
Well, it's not all revenue driven, right?
No, it's not all revenue driven. I know a lot of it is, focusing on growth, but I mean, with one of them making a huge push to get into EV, I wouldn't discount GM that much, would I?
I mean, potentially, but I would. I tend to default to the broader market pricing of things.
Yeah.
I think, I'll have an opinion on stuff, certainly, but more often than not, I acknowledge the fact that the collective intellect of the market is likely more smarter than I am, right?
Yeah.
Based on that sentence right there alone.
Well, yeah, I'm not going to say they're wrong, but I'm not going to invest in it as a long-term holding at this, where it's at now.
God, I have shares in Tesla right now.
Oh,
I'm actually running a covered strangle, and they're up handsomely.
All right. Well.
I entered into Tesla when it was trading 124.69.
I guess I'm looking through some of the notes that they made. They're still sticking to their target of a 50% growth in deliveries. I mean, yeah, there's still some really good numbers on here.
And I mean, the thing is people also, it's important to look at the performance of the stock.
Mm-hmm.
And to see how wild the volatility is, right? Less than 6 months ago, we were up at 314. Now we're down at 101, now 160. So,
a lot of movement.
It's definitely, yeah, exactly. And it's just a very different beast than something like GE that might be in a similar space. But the other thing is
GM.
When you look at, GM, when you look at Tesla, they have a really strong brand positioning, and everybody else is trying to come out with their electric vehicles, which is obviously going to add pressure to Tesla. But you got to give at least the forerunners a little bit of a moat space in terms of how you qualify their performance and their market standing. And even though there's other places coming out with EVs, I still probably would gander that Tesla is pretty far ahead of them.
They should be, yeah. The only other downside with Tesla is the CEO tends to like to make statements on Twitter that affect the stock price at a moment's notice.
Yeah, and I think that adds volatility, but it also just highlights the to me it's nonsense. Like for people to look at Twitter comments like that and immediately start trying to discount or reprice a stock, it's madness. So I think that ideally going forward, we'll actually start to see more connectivity between company CEOs and the broader audience, even via something like social media. So to me, I don't even look at that as a bad thing. I view that as just again, over emotional market the market's just wild, man.
Well, I mean, the problem is that nobody's vetting his tweets.
And nobody should have to.
Well, he's in a court case right now for tweeting out misleading statements about funding for something.
Yeah. And I think instances like that where, there might be some misleading stuff, sure. No issue with somebody being held accountable for that, for sure. But in general, I think that people just, at least the market, I think the market is too used to a very sterile environment. And I think we see that even with social media. We see that with media sources, information sources. I think people are just exhausted with this sterile stuff. and seeing somebody go on Joe Rogan's podcast and smoke a fucking joint with them, like, I think that's dope.
That was
I
awesome.
literally think that's dope.
Yes, I love
Because
that.
but the market hated that. The market was just like, oh, this guy is, he's a loose cannon. It's like, y'all just need to chill out, man. Like, let's see what he does.
I mean, even when he went on SNL and called Dodgy Coin a what do you call it, a scam or a marketing pyramid scheme or something, like even that I thought was hilarious.
Yeah, and I think the main aspect of Tesla valuation is just it's very future focused, and I think that's what people are attempting to adequately price.
Well, I mean, wasn't Tesla like? I mean, there's a lot of short sellers that got stuck on that that initial run up back in like 2020, right? Wasn't there? Wasn't that a large contributor to that?
Yeah, I'm not too familiar with the squeeze, but it wouldn't surprise me whatsoever because Tesla has like really fascinating short cycles, anyways. Because to your point, what in 2020 it went from, whoa, what was it? This is post split, but it's had a couple pretty significant run ups. I see one run up where it went from 23 and change to essentially 285. And then in 2021, it essentially had another run from, 2 to 4.
Yeah.
So that the volatility is just, it's there.
Oh, it's definitely there.
Mm-hmm.
Happy New Year from our friends over at Manscaped. The ball has officially dropped, and so have mine now that the bird's nest has been cleared out. Whether you had a New Year's kiss or not, the leaders in below-the-waist grooming have you covered for your much-needed resolution of bringing sexy back. Join the 7 million men worldwide who trust Manscaped with our exclusive offer. Go to manscaped.com and use code 2BULLS for 20% off plus free shipping. Now, as always, that's the number 2. Here's a toast to the new year and to a new you with no unruly pubes. Now that I've done the hard work of clearing out the overgrowth, this year is all about maintaining. Nobody wants to play golf on an overgrown putting surface. Maintaining a manicured playing surface is easier than ever with the global leaders in below-the-waist grooming. This year, take your package to the next level with their Performance Package 4.0 and other premium wet goods. And that's not what you're thinking. Inside the Performance Package 4.0, you'll find the Signature Lawnmower. The advanced skin-safe technology reduces nicks and cuts on your delicate parts. It also comes equipped with a 4000K LED spotlight that'll shine a light to the promised land 23 looks to be. And your grooming routine isn't complete without applying Crop Preserver and Crop Reviver before showing off your 23 self. Just make sure that you have consent. These unique formulas take care of the smelliest parts of your body and are a big boost of confidence to the new year. To complete the set, Manscaped also threw in their Shed Travel Bag and anti-chafing boxer briefs as free gifts to keep all your goodies stored comfortably. And believe me, those boxers aren't comfortable. If you really want to make 23 the year to remember, make sure you try out Manscaped's wet goods as well. This includes their ultra premium body wash, 2-in-1 shampoo, and body deodorant. These products are the absolute perfect follow-up after your New Year's gym sessions. Cheers to new balls in 2023. Hear, hear. So remember, guys, get 20% off and free shipping with promo code 2BULLS at manscaped.com. That's 20% off with free shipping at manscaped.com and use code 2BULLS. Time to feel sexy and free in 23 with Manscaped. All right. Well, I think that's enough of Tesla. What else we got to talk about here?
So one of the other things that was interesting to me was home sales.
Ooh.
So new home sales came in actually a little higher than expected. It was expected at 6.12 million. It came in at 0.616. So a little higher there. And then this is the interesting one. The new home sales change month over month was expected at negative 4.4%, and it came in at positive 2.3%.
Really?
So a pretty big variance there. The new home sales month over month isn't like a huge deal, but the main note here is just obviously a bit of a capitulation in the trend, and the housing market, I still feel like it needs to contract more, but part of me also thinks it might just be because I'm in San Diego and it really hasn't contracted that much here, if at all.
It hasn't really contracted much anywhere, I don't think. I mean, I think we're starting to see some signs of it, but not much yet.
That's what I started looking at. And interestingly enough, Redfin has some really interesting market data, and new listings have contracted significantly.
Mm-hmm.
And beyond just new listings, we have things like median sale price, and it's plummeted since mid 2022. So like May, let's see. So like for example, in Los Angeles, I'm in San Diego, but in Los Angeles in April of 2022, the median sale price was $900,000. As of November 2022, it's 810. And as of December 796, so like 800, something like
Mhm.
that. So somewhere like LA, somewhat resilient. Seattle went from 850 in May to 700 in December. So it's definitely contracting without a doubt.
Right.
Yeah, it's just I personally did expect to see a little bit more contraction, but I mean, it just goes to show you like the previous relationships that we've seen and defined and qualified for the markets, they're not always what it's going to be, man.
Well, I mean, I was expecting the rising mortgage rates to really play a role in, or a bigger role than I think it actually ended up doing. At least until people came to terms that higher interest rates are going to be around for a while. I do know that we've been seeing a lot of lenders laying people off. My wife being one of them.
You mean like just mortgage brokers?
Yes, yeah. Yeah, because there's just not enough business right now. There's not enough people buying or refinancing. Obviously, no one's refinancing. Just came from, I think I had one house locked in at under 3% on a 30-year fixed.
Yeah, that I think makes a ton of sense just because we know that there's less
Mm-hmm.
less stuff moving, pending sales, new listings all down, overall home sales down. So I think all of that makes, yeah, it sounds right. Interestingly, I think, depending on how rates move this year,
Mm-hmm.
like we're all expecting, not necessarily any sort of significant contraction at the earliest, the middle of the year, which I still would doubt that heavily,
Yeah.
but just for argument's sake, let's say the earliest. And I really am surprised that the housing market hasn't contracted quite as much. But it also, again, it goes to highlight that it's not as linear of a relationship as mortgage up, housing price down.
No.
I know that's the way that we view like a relationship with bonds, but that's not how the housing market works. It's just a kind of nominal relationship that has different covariance, which I just think it's an important note for people because, seeing it behave the way it still is surprising to me, but it just reminds me that it's not a linear relationship like that.
No, and there was, I think back during the COVID crisis, it seemed like there was a lot of investors like purchasing a lot of the inventory during that time period. And I think that's why rents have gone up so much. And I think there's just less inventory for the everyday person to be able to buy. I think the investors bid it up so much that they pretty much priced out the everyday person. And hopefully now we'll start to see that come down to where those people, first time home buyers, can start getting back into houses again.
I think the only counterpoint to that would be is if new starts picks up. Because if
Okay.
inventory otherwise doesn't meaningfully change, it's hard to tell that would be the output of the relationship. I totally understand your hypothesis.
Sorry, I thought that's what new residential sales meant.
It depends because some of them could be ones that were already in progress and completed.
Right.
But
right.
then, right, so you have to think of the overall life cycle of a house being, built. A lot of them are in progress. So that's actually a really useful monthly metric to track is new starts, new permits. That gives you a lot of fidelity against active homes being sold because you could see a lot of this dip coming. I was literally talking about it in 2021, like super early.
Mhm.
And it's just because I could see those numbers starting to fluctuate. And it was actually a very tradable event nonetheless. But you can see some of those early indicators. And unless there's a good interjection from whatever external source to modulate the movement of houses, those permits really are very telling because there's a lead lag relationship. Takes X amount of time to get a permit, takes X amount of time to start on a house. Then obviously you have the actual time to complete.
Remember when lumber was going through the freaking roof?
Mm-hmm.
How much of that was tied to home?
A ton.
Yeah. So I'm curious, what's lumber doing now? I haven't even looked at that in probably a year and a half.
Yeah, lumber is an interesting one to keep an eye on, specifically because it can help a lot with inflation. People all the time use things like lumber for inflation, which I guess it makes sense because it's when it starts getting into those more, I don't know how to describe it. It's like people get really interesting, in my opinion, when it comes to things like the relationships and the ratios between different products.
Hmm.
So it's really interesting because I know people regularly use things like lumber for that specifically. But if you can look at, I think it's what LBS, if I'm not mistaken,
I'm looking at
lumber is
LBR, lumber futures, and
yeah
it's actually pretty high right now. It's up at 605 as of close today. Bottomed on the 10th of July at 430, if I'm on the right chart.
yeah. Because I see we're coming off a recent high from May. I'm zoomed out really far. I got to zoom in a little bit. Coming into a year daily.
So it looks like, yeah, lumber prices have been spiking the last week or two.
Yeah.
Hmm.
Which, I mean, if we look at it over the, yeah, dude, see, like, zoom out to a year, because a year ago it was like 13. And then we definitely looked like bottomed out 365 ish in January and then back up to 488.
Which ticker are you looking at? I mean, LBS is random
Um,
length lumbers futures. I guess that one could work.
yeah,
That's probably the
exactly.
better one. Okay. Yeah. All right. That looks. The one I had only had one contract on there.
I see. Yeah. That's kind of a typical proxy.
Okay. That makes a lot more sense. Looks like it's just bouncing off the bottom.
Yeah, but I mean, during the previous market, obviously we were getting lumber was just
It was
flying
insane.
off the handle. It was out of control. But I think a lot of that was just, supply chain. Supply chains are
Yep.
smart and people are hedging. Demand goes up as people are hedging the price to build houses. But it did surprise me. My guess is that was mostly for the groups that were in progress, because otherwise, I wouldn't, if I was a housing developer, I wouldn't be speculating on a bunch of houses when I know prices are going to start skyrocketing. I would be mostly just trying to procure land, I
Right.
guess, depending on the structure of the business.
Good point.
It's interesting. Dude, the relationship between all that stuff is always so
I
fascinating to
know.
me.
It could blow your. You could spend days just fucking falling into a rabbit hole trying to make sense of it all.
Literally. And I still think even if you spend that time, there's always these additional connections that you don't fully understand.
No, but it's still fascinating trying to make them.
Yes.
I know that there's probably not much use in trying to figure out why something did what it did, but I still want to know. I don't know. I guess I'm just a
Well,
curious
I think
person.
what I tell people is I don't think there's anything wrong with asking why and postulating. I think
Hmm.
the issue comes is when we believe it's a causal relationship that we can
Yes.
clearly track and define over time.
Right.
Because you even look at how that treated people that were trading, the typical bond relationship to equities. And everybody was so blown away when they started moving the way that they did. And although that it is not typical for them to move like that, it's still those relationships. If you look at them over extremely long periods of time, what we saw wasn't anything that insane.
Hmm.
So, once you get too set in your ways, I think is when it becomes a problem. But
Yeah.
otherwise, I think it's important to postulate why we think things might be doing different stuff.
And as we've learned, I think everything is so interconnected and so complicated that you can't find one thing that's going to be the key mover indicator. Oh, GDP went up again this year, this month. That means if it goes up next month, then I'll be buying because it's going to drive it up again. No, not necessarily. There's a lot of other factors.
Right. Exactly. What I tell people with that is different things come into the spotlight that matter.
Yes.
Because, if you look at exactly like that, if you look at something even like a rate statement, and if rates were relatively static month over month, nothing's happening with them, the next rate statement that comes out, unless it's just this insane out of the blue movement, that rate statement in and of itself probably isn't anything too spectacular. But, as we all know, the last 2 years, that's been like such a focus point.
Oh, yes.
So, yeah, so I think even the things that truly matter to the market ebb and flow quite a bit.
All right. Well, there's one last thing that I wanted to just bring up. We've been talking a lot about all the companies cutting jobs, and I think we've been focusing more on tech,
You're
but
fired.
starting to see, yeah, starting to see some other companies like Dow and 3M are now announcing cuts. So it's starting to make its way into the other markets other than just the tech. Let's see.
Yeah.
Hasbro is on here. Dow, 2,000 people. SAP is a tech company, I guess. The funny one, I guess, was WeWork. I guess not.
WeWork, what I think like Chipotle is like hiring, which is pretty hilarious. There's a lot of different movements going on. Obviously, burritos are now the light at the end of the tunnel.
I guess.
I think still much of what we're seeing is just overhiring from COVID,
Yeah.
and now's a great time to cut costs. You never want to see, and this is another thing that I think people need to pay attention to in these different earnings releases, is as folks are projecting better financials moving forward, a big part of that, if it's coming from letting people go, that's like a one-time improvement.
Yes.
It doesn't mean that the company is now all of a sudden fixed and everything's good. You're going to get a one quarter kickback from that. And I just, a lot of people I think get misled off of that.
Well, how much of good earnings too can be tied to just the effects of inflation? Like if you're just watching revenues and you see that it's jumped, 5%, but inflation's gone up 7% in that time period, like, no, you're still actually doing worse.
Yeah. And I think that that's the problem. And I think that's why anybody that follows earnings, we don't go off of any one metric for that exact reason. There's different things that cause different behaviors, even if they sell, materials, if they sell a plant and all of a sudden it looks like, again, like revenue just skyrocketed,
Right.
but it's like, no, man, they just sold some shit. That's a one-time off, then it gives you a different perspective. I think the other thing with inflation though, is even if revenue might be higher potentially, typically the inverse relationship to that is sales would go down. So you could look at that and say, oh my God, sales plummeted. What's going on here?
Right.
But maybe they charged more for the sales that you know what I mean? That's
Yeah,
why it's always important to actually go through, if you care about that stuff. Well, a lot of times the market will price it pretty effectively after the release. But if you do care about getting under the hood, it is important to like look through the transcript, not even just what they report, the reporting materials, but the transcript and see what they're saying.
Yeah, the guidance is very. It seems to be the more important thing.
Exactly, because what's happening is we are validating what we thought happened this quarter, and then we want to now discount what we think is going to happen next quarter. So the main ways you're going to see big movements in earnings is if there's a large disparity between what was expected for the previous quarter and what happened, or if we're forecasting out and something, again, is a large discrepancy between what we think will likely be forecasted versus what is.
Yep. Very well said. All right, Eric, I think we're getting towards the end here. Anything you want to leave the listeners with?
No.
All right. Well, then we'll be back at you guys soon with another exciting episode. But until then, bye.
Take care, everyone.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks in the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.